Welcome to the Reinvestors Road Trip. We are going across the country interviewing real estate investment and professionals from each province and showcasing the towns they invest in and the strategies they use. We are bringing you these conversations so that you can see what opportunities are out there, sharing other success stories, and opening up your mind to new possibilities.
Today we have an awesome guest with us, Donna Cook. Donna's passion for real estate supports her values of family, wellness, happiness, fitness, volunteering, and helping others. Her experience comes from growing up in a real estate family and business, which has helped her build a solid foundation for her own business. Since 2009, Donna has employed many different and innovative strategies to make deals happen. Everything from new builds, conversions, buy and holds, buy, fix, sells, and rent to owns in the Winnipeg market. She specializes in building profitable relationships with joint venture partners whose values align with her own. And goals for 2020 are to be challenged in ways she's never imagined. In this time is for helping others, staying healthy, education, networking, building relationships, and coming out stronger. She is continuing to be successful in the rent-to-own business while educating and empowering investors and tenant buyers. This is an awesome topic. Donna, you're an amazing person. Why don't you just give everybody a little more detailed background about how you got started in all this, what your expertise is, and what you got going on.
Thanks for having me here. I think this is a great idea, showcasing the whole country. So my dad was a builder, so I always was involved in real estate in some way. But, it was all long-term rentals and building houses. And so it wasn't something I really was interested in at the time. And I had an accounting service. And till 2009, I just decided it's time to get into this. I like the long-term strategy. Of course, you can make more money, and you're not always having to work in your business. You can work on it. And so I started flipping, started with my son actually. And one of my clients, my accounting clients, approached us to see if they could be our investors. And then we bought some properties from them. They were kind of slum landlords a bit. And so we fixed them up, flipped them, and continued that part-time. About 5 years ago, I got into it full-time, and then started looking to make longer-term relationships with joint venture partners on long-term rentals, and did some conversions, single family to duplex, built a couple of cottages. And then along the way, I learned the rent-to-own strategy. I took a course with Dave Dubois and turned one of my flips into a rent-to-own. And did a couple, but it wasn't that popular here in Winnipeg, as was in Alberta and BC. And then in 2009 or late 2018, I put another one up and got like 100 people responding to it. So it's like, holy, I better rethink this. And that's when and flipping was, it's just getting harder to buy properties, and that there were so many people doing it here. So since then, 2019, I really stepped up my game, learned more about it. There's always something to learn. You're staying in touch with people that are in the business, mortgage brokers and that. I've learned a lot about credit and, how we can help people more that way. And I just love the strategy. Now I started it monetarily, let's say, but now that once you get into it and you learn people's stories and what happened to them, it's not always their fault. Mm-hmm. And they, or sometimes you are doing something dumb and you get into a credit situation, but, as long as they're learning and want to get out of it, then, we'll work with them. And then, of course, working with families, we've got immigrant families. The family of 5 have been in an apartment for 6 years, and we're able to get them into a house and, paint the kids' rooms the colors they want and things like that. So, you kind of get wrapped up in that, but, it's still about the numbers, but, it is a feel-good investment. And then working with making new relationships with joint venture partners to get into the strategy, because, it is such a safe strategy.
Yeah, I think it's so cool that you do this with your son, and the earlier you can get in, the better, right, with real estate. And yeah. I can only imagine all of the well, probably tears that you experience at times with like people's stories that you hear about, and the successful pieces as well, like that family that was in an apartment, put them in a house, and now they have a little bit more stability and some equity that can be built. And I think it's a really cool strategy, RTOs, and I think it's going to be more and more in demand as things become more and more unaffordable at times in major markets, especially here in BC. For people who really find this an interesting topic and who might want to reach out to you, what's the best way for them to get a hold of you or to learn more?
You can email me at dmcook10@gmail.com.
Beautiful. That's we're going to dive deep into this, guys. So if you do want to reach out to her, that is a great way to do it. Now, why don't you tell us a little bit about where you are investing from? Obviously, you are coming from Manitoba, and specifically the Winnipeg market. Why don't you tell us a little bit about that? In the documents you sent over to us, you said something that in the bottom of it, it says, here in Winnipeg is Canada's best kept secret. And I'm dying to hear why it is Canada's best kept secret for investing. So tell us a little bit about that.
Part of that is just what's going on in Winnipeg, because people don't think about us, or they just think of frozen, a frozen place. But you had commented, we said it's one of the sunniest places in Canada, so that kind of makes up for it. And we are the Grey Cup champs right now. Can't forget that. But the house prices here are so affordable. So it's affordable for people to get into, and it's affordable for investors. They can get into a decent 3-year rent-to-own term for $50,000 down. Or I have long-term rentals. I did a side-by-side last year. I brought my investor into it, and it was $250,000, and it cash flows it's around $500-600 a month. And so our average price actually in Winnipeg 2019 was $316. Most of my properties that I'm buying for rent-own tenants are under that. So, we're in the 200s, 240 to 300 kind of range. Diverse economy here. We're not dependent on oil and gas or any of that. We've got agriculture, transportation, health, IT, tourism, manufacturing is big. There's lots of building going on right now. Things I think slowed down a wee bit in the past couple months, but not that much. Things are still going. Real estate was an essential service, so we've been continuing through this whole thing. Unemployment last year was the 3rd lowest in Canada. And projections are, annual growth about 10,000 each year. We get a fair amount of immigrant families here, especially from the Philippines. And that's been a great market for me. And then, with COVID, we did open up fairly early. I think things were quite low here as far as, the bad things happening. And some of the manufacturing that's turned around is, they're manufacturing masks and gloves. One of the distilleries is making hand sanitizer. My sons have a business, and they do fabric building. So they did a rapid deployment shelter, so people can quarantine there. And so that's just some of the things that have gone on here. And then also our stable market here. No matter what's going on in the world, we seem for some reason not to be affected. I have the stats back to 1977. Every single year our average selling price has gone up, except for 1982 and 1990. They dropped $2,000. Every other year it's gone up. Even 2008, when all that was happening, that was one of our biggest jumps. So I'm not sure why, but so you feel comfortable investing in here because it's easier to figure out what your price is going to be in 3 years. Our average rent to owns are 3 years.
That's incredible. I love hearing that. What kind of demographic do you have there? Like, what kind of tenants are you seeing? Who are the typical people that are coming through for the rent to own business? What is their, typical jobs, and what is their age range, and what does their typical demographic look like?
It's everything, because things, sometimes bad things happen to good people. And, I had one lady, they're getting qualified now, but their house literally fell apart. It was a bad build and they had to go bankrupt because it was going to be $100,000 to fix the house. And, they're, I think in their 40s, and I've had people in their 60s apply, didn't end up doing it, but something bad happened to them as well, or might be health. So right now I think I have ages from 22 to 52, but probably 40ish is average, and some of them I have 3 new immigrant families. So, and one of the things that happens here is, like, let's say compared to the Philippines, it's harder to get credit there. And then people come here and it's like, wow, you can get that car and the TV, and then all of a sudden they get caught. And I also understand that people don't understand how credit works here that much, and might have been different in their country. So there's that education that they didn't know about. Lots of Canadians don't either, but so they get caught in something, and then now they have to, we work with them to fix it.
That's super cool. I love there's such a diverse mix of age range and demographics and everything there that kind of stimulates it and continues it going with different variety of people coming in. Obviously, you're doing some rent-to-own deals there. If we were to talk about different strategies, obviously rent-to-own is working very well for you there, and we think we know why, just because all the demographics and the security there and everything that's going on. What about some other strategies? Like, what about like fix and flip, or just long-term holds, or things like that? Are the numbers working for those kind of properties for you? Or is it, do you have to make rent to own work in that area in order for the investing to work?
No, I do have long-term rentals. I just kind of I had a couple situations where, they wrecked the house, and that's like 2019. And that's like when I said all of a sudden things were getting really more interesting here for rent to own. There's great value there, and mine aren't in the highest areas. Mine are in a little bit lower type area, and they do cash flow well, but sometimes they cash flow well, but then you got a little more hassles, let's say, with tenants. And other areas that you could go into, they don't cash flow that well, but make be a little safer, and then it's higher buy-in. And I just find, like, by the time you go through the long-term rental, and then you have to fix everything, the short lease, the rent to own, they take care of the property themselves. But again, you still have that long-term, pay down, the mortgage pay down, and that. So you kind of can't beat that, though. We did a couple conversions, so that helped, going from, single family to duplex. And, and I'm looking for apartments too. That's always the goal. Just haven't found one yet. I've offered on some, but they haven't worked out yet, but one day they will.
What about fix and flip strategies? Is there much there to be able to go in and buy something and get something a little bit cheaper and renovate it and flip it?
I always do that. Yeah. Like I flipped probably about 50 that were just flips. And then the rest have been, another bunch that have been flipping to my long-term rental, the BRRRR strategy, or, same with my rent to owns. I've done some of those. I just find it's challenging to get properties right now. A lot of people are out there, taking courses, and, it's not a big city. And so it's challenging getting a property at a good price. So, but once you do and get one, and then, it'll sell well.
The population of Winnipeg?
Around 750, I think.
Oh, wow. Okay.
Yeah, 760.
One last quick question here. What's a vacancy rate there? So for like outside of the RTO, maybe even in your RTO, what's vacancy rate? Is rent pretty strong there? Is there a bit of a vacancy rate?
No, it's 3% right now. So that's the highest it's been since I've been doing this in 10 years. I don't usually have too much of a hard time getting people, you just, or if you're taking longer, it's because you're trying to be fussier and, qualify them. I think that's the most important, is screening the tenant.
Also on that note, what are rent prices? Like a 1-bedroom, 2-bedroom? I don't know if you have many 3-bedrooms there for rent, but what do the rent prices kind of look like in that area?
It depends on the area. Like, it's totally, and that's why sometimes having these houses in that kind of lower area, I don't know what to call it, a little challenging area, because you can rent there for, maybe $1,200 for a 2-bedroom, but, go into another area that you're going to pay $100,000 more for, you're only going to get maybe $1,400.
Mm.
And so that's kind of the advantage there.
In general,
the one house that, like the house that I have that my investor bought for $250, we're renting that out for $2,600 between the 2 suites.
Wow, that's good.
Those are some great numbers. Just off the back of an envelope numbers, those are pretty solid compared to what a lot of that type of property would rent out for here on the island. From a macro level, would you say that like Winnipeg and the areas that you're investing in it would be a hot market right now, or would it be kind of cooling off and more of like a buyer's approach?
Right now it's a seller's market, actually. I just checked in with my realtor before calling you, and he had 2 houses last week that went 26 over asking.
Wow.
But it's because, right now sort of not a normal market, I guess. We had the best January and the best first quarter over 2019. And then of course COVID hit, but we still did continue, but there's less inventory right now. So some people aren't putting their houses out, but whoever is out there is, they're selling and selling well. There's multiple offers on quite a few of them now.
I see. Yeah, we're seeing that in a lot of different markets. COVID a lot of times it's dropped the supply, but it's also equally dropped the demand because people aren't going out and about to open houses and that kind of stuff.
Yeah. Well, a lot of this was virtual. You could do it virtually, and then they just had rules you had to follow, and you could go in at one at a time just to go view a house. But I've talked to several realtors, and everybody's still saying they're still seeing the prices are the same. Those are going for over asking just because there's a shortage, but
Nice. Let's talk about a deal. Let's talk about specifically like an RTO deal, because I think it's a really interesting topic and something that's not as commonly used in a lot of markets that we look at. So, you sent us one that looked really interesting. Let's start at the very beginning. How did you find this deal? How are you finding other deals? What do the numbers look like? How are you structuring it?
Well, this one that I sent you, they'll be moving in on Tuesday. And I have a website, and I do some marketing on, Kijiji, Facebook, and that, drive people to the website. I want them to learn about rent to own on the website, so they're, not expecting to get into a house for $800 a month, and and they realize they do have to put money into it. There is a down payment, and just it lets them know who we are. Then they put in an application, and then we start our screening process. I have an assistant that goes through all those, and we kind of work up the levels of checking them out. We have them meet up with a credit advisor. First, he just takes a look at it and tells us what he figures they can qualify for in 3 years, what they need to do to fix their credit, and any other challenges they have. Lots of times there's stuff on credit reports they don't know that are mistakes, and take a look at their score. And then it gives them 3 years, let's say, to save for the down payment, because nobody ever seems to have enough for the down payment. It's hard to save for. Once we've gone through that screening, then meet up with them and get kind of that gut feeling that they're going to make this work. It's all about the numbers, but it's also about the person and the family, and can they turn this around? Are they motivated to, or do they expect us to do something? Because they have to work at it. And then that's, once you get through that, you want to have a really solid tenant, because when you bring in an investor, that's their concern as well. Once we know what they can qualify for, then we start looking for houses.
I just want to pause you there for a sec, Donna. On your guys' website, you guys had a calculator on the side of it where they could actually just put in what their monthly payment was. It's so simple. It's just like, how much can you afford to pay monthly? And they put that in, and then it breaks out the deal for them, so they can actually see what the kind of property they can get into, or the values of properties they can get into. And I thought that was such a great feature that I hadn't really seen before, where it was just like someone that maybe didn't understand what rent to own was could put their number in on the side there, like, hey, I know I can afford $2,000 a month. And it just gives them a quick breakout of what things actually look like in their timeframes. And I just thought that was really cool feature on your website for people to use.
It gives them kind of a starting point, but then of course it depends on how much debt they have. And so then that really knocks down how much they can qualify for. And, that's the reason for going to the credit advisor, is to say, okay, this is what the bank is going to see, and how can we make them look better? And some of that debt will be paid by the time we do take them to mortgage financing, but sometimes it won't be. They have a longer term, car payments or something like that. And then some people are in consumer proposal, things like that. So I've learned a lot about that in the last year, and not all of them are legitimate. So, we've helped a lot of people get out, or not a lot, a couple people get out of them that were set up in something that wasn't helping them at all. Okay, so then after we get the tenant ready, we look for a house. Now we're looking for a house that they want. It has to come, of course, within their price range that we're looking at. We want to be under the price range so they're comfortable, they can make payments, we've checked their budget, done all this. And I still want something that the average person can buy if for some reason this doesn't work. So, kind of like my 3-bedroom, 2-bath, have a garage, full basement. That's my favorite house. And it has to be somewhere that everybody's going to buy.
Yeah. Do you go like to open houses with some of your tenant buyers, or?
Well, I'm trying to make things so it's not so time consuming. So I have ran around with my realtor, just him and I, and ran through houses, because I can be in 5 houses in an hour if I had to, you know what I mean? Not dragging all these people through and their kids. And then once we get a couple that we like, then we bring them to the house. Gotcha. This past one, my realtor, she went and looked at a bunch of houses on her own, and then sent us a couple of videos. So that one was even better. Yeah. That was perfect. And then we only ended up going out twice with the tenant buyers. With this one, we were looking in a bedroom communities also, so there was less available. And but some of the bedroom communities here are very popular, so they have really good growth. And this one's close to a small town. It's only 20 minutes from Winnipeg, and then 10 minutes from a small town, or a city actually. And so it worked out with everything that they needed. They didn't need any renovations. We get the home inspection, and I put in the offer. We do our rent to own agreement. We sign that. They have to put their down payment down, and then I'll have an investor lined up saying, hey, they know that this is what we're looking for. This is what our tenant looks like. So then they can buy the house directly. And then just go through all that fun process with the banks these days, and then they're ready to move in.
That's awesome. I do want to dig into some of the numbers on that deal and go through what you bought it for, what some of the rent looks like, that kind of stuff. But before that, are you thinking that through this whole COVID situation, that's going to put out a lot more opportunity for you, in a sense of more people looking for rent to own solutions that might not have the right credit, because a lot of lending is being restricted now?
Yeah, it might be.
Yeah.
We're actually looking at moving up to 10%. I have pretty well, I started this at 5%, but now we're looking at having everybody at 10% down. And almost everyone that I have in my system here has that opportunity. Maybe we're getting them to save 7%, the 5% down, 2% closing, but then they have the access to another 5% through an RRSP or something. And we don't want them to take that all out now and lose the tax, so they can use it as a first-time home buyer. And so if they don't have 10%, it might take them longer to qualify or to save for it. And they're going to need rent to own, because they just don't have that when they're going to the banks. And I'm sure the stress test didn't help either. And COVID, maybe they've lost their job for a couple of months and now they're starting again. And, they do have to have a job when they come to us, but, it might be a new one. So the banks are not going to be, crazy about that. I have a couple of people that are self-employed, and, they look really good, but they need 2 solid years before a bank will look at them as well.
Before, Stephen, you jump into the numbers here, I just got a quick question. A lot of times when we talk rent to own, there's 2 different types. You can either get the tenant first and then help them go find a property, or you can get the property first and then go through your tenant base. Are you primarily one or the other? Are you running that simultaneously, just getting a lot of people in the door and then going out and finding properties and kind of doing that both? Or do you have a specific order at which you do it for your company?
I was started house first. So I would buy a house, renovate it, then kind of flip it to the rent to own. And it was good, but then I just had so many applications that, they needed something else. And so I felt like I was losing a lot of opportunity there. So now I've just made more relationships with more investors. So now they're ready to go when we get somebody. And like I say, I give them, let's say, that bio on those people, tell them what we're looking for. And then they say, yeah, okay, we're interested in that. And so then we can go and look at house, or have the tenant first and then go look at the house, because then it's something they really want, because they've picked it out. And then a couple of them I did, actually 4 of them I've renovated for them as well. So I renovated them, in a way that, yes, anybody else could buy it, but, painted certain colors for them or picked out flooring or whatever, so they feel they're part of the process.
Right on. I love that strategy. Talk to us about the numbers here. So, if you're mid 200s on a deal, say you're 250 or something, an investor's going to put down 20%, 50 grand. Is there renovation cost typically for a value add? What do your rental numbers look like? What's that like extra payment piece for the rent to own side of things? And what's your typical kind of like cash flow look like?
Well, this one, was 255. So, 56 down with everything, closing costs and that. All the returns are double-digit returns, and of course with real estate, there's no 100% guarantee, but we feel these numbers are pretty solid. This one, and it depends if you're going to go for 30 or 25 year. 30 year gives you a little more cash flow. This one's cash flowing 390 a month. So, your profit center is your cash flow, your mortgage pay down, and then your appreciation. But also on top of that, we are getting their 7% that they're saving. So they put down an upfront deposit. Usually I'll take that upfront deposit because at this point I've already worked a few months with all this process. So it's kind of my first payday. And then then I like to, but I'm open to what works with the investor, because some people want cash flow. So I give them all the cash flow. I'm good with that. And then, and then we both do a little bit of a payout at the end. Every deal's different. I'm open to working with the investor to see what works best for them.
Right.
But, and then some of these advantages of this is we don't really have to look at maintenance. The tenant pays the maintenance. They are also taking care of the property. So we really, ideally, should not have any damages. And if they did, that means they're leaving or we're kicking them out or something. And then we've got their deposit to take it out of. And then also they are able to improve the property. So every one of my tenants right now is doing something. They're either finishing the basement or adding a garage or not a garage, a fence or something like that. So when they do go to buy it, they'll have a little bit of their own equity into it as well.
Logistically, like there's the piece that, your tenants are giving you that pays on all your expenses. There's the cash flow side of things. And there's that like savings aspect of it too. So do you typically like have a joint bank account with your partner, and then you have like a savings account for like the down payment down the road, and then like another account for cash flow, or how does that typically work?
We have one bank account for each property, and I do all the financials. So, the investor doesn't need to do any of the work, but I pay them out of that account, usually monthly or quarterly, whatever it is that they want. And the cash flow for the deposit, because we're owners, we don't have to save it in a separate account. It just comes off of their buyout at the end. But it depends on the investor too. If we want to just let it sit there, we'll let it sit. And if they want to take it as part of their cash flow, which is basically part of their, profit in the end, they can take it.
Putting yourself in a situation that, on the opposite side of the success piece, what would be like the hardest part about pulling a deal like this off?
There's a few. Well, it's a lot of moving parts.
As it ever.
You're trying to get the tenant, you're trying to get a house, and you're trying to get an investor and get all three of them all at once. Yeah. That timing is interesting. You really, really, really need to screen the tenants well. Mm-hmm. And that's, I think, maybe that's 90% of it. Mm-hmm. As long as you have a good tenant there and you can work with them and make it all happen. It is a win-win-win situation. Of course, it's nice financially, but it still has to work for the rent-owned tenant and has to work for the investor. Mm-hmm. And myself. The houses we're buying are pretty solid. I don't really have any problem with the houses. Either I've renovated them and sold them a really good property. I don't want anybody moving into something that's falling apart. I don't want tenants doing renovations, really. I bought lots of houses from fixer-uppers, and you have to continue fixing them. So that's not their expertise. And if they do add something, they have to do it to code with a professional. So yeah, I guess it would be the tenant. Investors love the strategy because of the return and the safety of it. Yeah.
On the screening side, I'm sure you have an awesome system for putting that all into place. How much of that is actual just like intuition or gut?
First starts with the numbers, first, and then you're right. I have to have that gut feeling that they're going to do it. I had somebody recently, and they're pushing me to get them involved, and they make over $100,000 a year, but they had a bankruptcy, which of course they didn't disclose. They forgot about that part till we started checking them out, and they also bought a $90,000 vehicle. So that just tells me you're not quite there mentally or whatever. So.
The strategy seems to be working pretty good for you in Manitoba. Now there's going to be people that are watching this from all over Canada. If you had to do this differently in, say, BC or Ontario, where things are a little bit different, what would you say are some of the big things that people need to adjust or change coming into this that you might see for them?
Well, I don't know other markets as well as here. I've had other people approach me to do, even in Manitoba and in a couple other provinces, to do a rent-own for them. So I could do, like, let's say the screening and all the like there's contracts that have to be signed, and most people don't have that. I can do that part for them as long as they have a good house, and let's say they know they have a solid house and they know their market, that they can get an appreciation, in 3 or 4 years. But that said, I know other markets don't have cash flow like we do here. And like, I think that's your case in BC, because I've looked at some rent to own there, and they're typically 5 years. But there you have maybe more appreciation in the end. Maybe you don't have as much cash flow. So I think it's just adjusting it for that market, and take a look at what is the need, what is the need for the rent-own tenant, and then what is the need, let's say, for the investor, because, some investors love appreciation, some love cash flow, and it's aligning with your investor too. You have to have somebody that likes this kind of investment, doesn't want to kick them out after 3 years just in case something doesn't quite work out. And it's looking, I guess, at all of those things. I probably can help people look at it, and as long as they know their market, and we can figure out what do you need to tweak to make it happen here.
Super cool. I love that. It's cool that the strategies are universal throughout the entire nation, but you have to pivot and change certain things inside of it. So that's why, obviously the lower purchase prices with the very, moderate rents there make it really easy for this strategy to work. Whereas where we are, we've ran quite a few analysis where the rent has to just be so high. You're asking someone to put up so much money. If your rent is $2,000 just to get, the money for yourself, then you have to add in that extra $300, $400 on top of it. Now you're asking someone to put up $2,400. It's making them very cash poor. And it's just such a hard lifestyle for someone maybe of different demographics. Here, maybe you'd go for someone that just can't qualify right now because they're coming out of bankruptcy, but are self-employed maybe, or something like that have a higher income. Whereas where you're at, it sounds like it can be more just anybody can come in that's off the street kind of things. So
the other advantage, the other advantage there too, for the Manitoba area and for Winnipeg is here in Victoria, your average home price that you have to qualify for is $850K.
Wow.
That's all of the Greater Victoria area. You can find houses that are down, townhouse you could easily find for mid fours, but where you're at, you're a quarter of that basically, and so you have a lot more investors behind you with a lower down payment and the ability to qualify for more property too.
Well, in this way too, they can spread out their investment and do three. Let's say you could do 3 here or 3 or 4 almost, as opposed to doing in Victoria. And I did try to look at some there in BC. A realtor approached us, and but then COVID hit, and so then we just kind of put it on hold. And I've talked to someone in Ontario that's having that same problem. Like you said, all of a sudden their monthly fees are just so high. So I have investors from there coming here. Well, actually I have investors from Nova Scotia all the way out to BC. And, you can't do it in a declining market. So that's one thing. You have to make sure you look at that. And so if it's declining, just don't do it. It'll turn around sometime. And when it has turned around, then it's better. It's also good, if somebody's got a house and they can't quite sell it. I showed somebody, they were putting theirs on the market and they were having a hard time selling it. And the difference between, let's say, selling it, and then of course someone's going to, offer less, and you pay your realtor, and, here's today's price that you could sell it for. But if they saved it for 3 years, there was a difference of about $45,000, by holding it for those 3 years and getting, a good tenant and selling it, at an exit strategy that you have chosen, and a price, and they're paying it.
That's awesome. Speaking of partnerships and stuff, shifting gears here a little bit, what do your typical partnerships look like when you go into a property like this? So speaking more to the joint venture side now, how you're doing it, what are your typical joint venture deals looking like?
Coming into it, I'll give them, like I said, all this information on the property, give them the information on the tenant. But first of all, I make a relationship with an investor. I want to know what your values are. What are your needs? What are your goals? Are you looking for cash flow? And if you are, then let's look for a property that, let's say especially has good cash flow, whether it's rent to own or long-term rental. Are you needing to cash out in 3 years, or do you want a 10-year term? So if that's the case, then it should be a long-term rental. But yeah, first finding out what their needs are, and then do we align? We have to be, buddies for a while here, so you want to make sure there's a rapport and same values. And then from there, then we can start looking for a property. And I always have a rent to own that's pretty well almost ready to go. Even this month, I've gotten 35 applications so far. So it's still happening. And so I can say, if they like the rent to own, then that's great. I can set you up. I can tell you that, you'll get an average return of this. On average, I need 50,000 from you down, and you're looking at around 250 purchase price. And, you want to be pre-qualified for sure. And I have mortgage brokers that I work with that, helps them and makes it easier to process if, we know who we're working with, especially if they're, investment mortgage brokers.
That's incredible. And one of the coolest things about real estate is that every deal is different. And that's something we were chatting a little bit before we hopped on here, is just how once you get to know the person and their what their wants and needs are, you can actually change the partnership inside of that. And that's something Steve and I have really loved from day one, is the fact that we don't have to have a strict template on how we partner with someone. We can actually change things up based on the cash flow or the equity or the now or the later kind of stuff that they're working on inside of that. And you shared a little bit about some of the qualities that you're looking for in partnerships. If you had to give advice to someone who's just starting out, how are you screening these people? Obviously, you're asking some of those questions, but is there certain qualities that you look for in a person, not just what, what their needs are, but is there certain qualities that you need them to have in order for you to partner with them?
I guess, people that are looking for wealth and, what's your why? Usually it's family or something like that. And if that's what it is, then I think that, we work well together. Maybe someone that's just totally out for the money doesn't always work out because, when things don't quite go 100% as you expected, they're not going to be as maybe open to change. And you want to make sure, obviously, you've got the job, you've got the down payment, you're getting pre-qualified. And, just like I said, it's a conversation and a relationship.
Amazing. Well, I think that sums up most of the stuff for the properties and the joint ventures. There's some great information there. We're going to hop into a cool section now, which we're just going to do some rapid fire questions. Get to know you a little bit and some of the stuff you're doing. So the first question I have is, what's one thing every visitor needs to know about your market?
House prices, I guess.
Mm.
Yeah, really good house prices.
What is a local business that you want to give a shout out to?
9 Round Kickboxing and Yoga Public.
Amazing. If you were to have a fireside chat with anyone, dead or alive, who would it be?
Oh, maybe Oprah. I'd like to chat with her.
Great choice.
What's your favorite real estate related book or resource?
Well, anything Don Campbell is great, from REIN. And actually I'm reading, what's it called? Richard Dolan's Wealth Mastery. It's not all real estate, but it's a really good financial book.
We're going to jump into some would you rathers right now. So would you rather have great partners but bad tenants, or great tenants but bad partners?
Oh, no. I think I'd rather have a great partner, because you can always deal with the tenant. If you have to, you need to move them out. That's what happens.
Would you rather have the headache of 10 different partners on 10 different properties, or only one partner and only 6 properties?
Probably one partner with 6 properties.
That's a challenging one for all of us, because you want those extra deals, but having the extra headache of all those different partners is sometimes a bit of a headache.
But the advantage of 10 partners, then they might have some friends. So if they all bring a friend, then that's 20. So that's a tough one.
And the final question is, would you rather be outside for 2 hours in your underwear, or plunging a backed up toilet from one of your tenants?
Ew. Yeah, I think maybe the backyard, and there's not too many people around. I could do that.
Depends what time of year, I guess, eh?
Yeah.
Awesome. Well, thanks so much, Donna. We really appreciated having you on here. Some great information. It's been absolutely amazing learning about your market and learning about the strategies that you're doing there, and getting to know you personally, and just hearing about how you're doing your partnerships. I think it's absolutely incredible. Again, if people want to reach out to you or get in touch with you or hear more about what you're doing, what's the best way for them to reach out to you?
Well, I'm on LinkedIn and Instagram and Facebook under my name, or dmcook10@gmail.com.
Cool. And we'll probably attach some website addresses and stuff like that for people to check out here. And if you guys do have questions about this as well, you can hop into our community on Facebook. It's the REINVESTORS community, and a lot of discussions around different rent-to-own strategies and different properties, and hopefully expanding now the conversations across the province with these interviews, and just opening up some more conversations to people. And so thank you again for coming in and listening to Donna Cook of Freedom Lifestyle. Join us on our next episode as we continue to interview real estate experts across Canada, learning about different strategies and what works where. Thanks again for coming out, Donna. We appreciate it.
Thanks for having me. It was great.
Thanks, Donna. Have a great day.
Okay, you too.